Streible, Senior Analyst, Blue Line Futures. Phil, good morning. Thanks for joining us.
Yeah, thanks for having me.
Phil, what's driving the price action when it comes to the entire commodities sector?
Yeah, I mean, it's two big things. One, you've got the dollar index breaking out to the upside. You have a complete slowdown in the growth picture. And actually, we're starting to see inflation. It's subsiding right now. You've got corn, you've got copper, you've got oil. They're all breaking down from that run up that we've seen. I believe that the Delta variant is playing some role as they are talking about it being more contagious. We're starting to see additional lockdown measures. Just from me coming back to Chicago, entering any of the buildings here, I've got to wear a mask. So things are definitely slowing down a bit as far as that reopening recovery.
What's the outlook for the crude oil price? We do see prices at the lowest point since May. WTI, as I said, at 62.32, Brent 65. We were used to see it above the $70, stable above that kind of level. So what are we going to see from now on?
Yeah, there's a couple things that are affecting it. If you just look at the numbers, if you were to look at, available supply with the demand and then go out and, actually travel a bit, traffic is very high. And the demand is very high while the supply is quite low. So in one instance, you think that prices are going to head higher. However, you're seeing the EIA, you're seeing inventories being built from OPEC, and you're seeing those demand being cut as a forward outlook guidance. So that really derailed crude oil as well as that rising dollar index. So I think that we're going to be more trapped in a range bound. I wasn't expecting it to come this low. I surely hope that $60 will hold. I think it would be a little bit alarming if we go below there. And I do think that we should travel back up to 70 to 72. However, that could be jeopardized.
So is this your short-term target, 70 to 72?
I just don't know if it'll go back up there. It might be mid-60s, to be all honest with you. It seems that it's been damaged technically. There's a lot of outside influence as well. I think the Fed announcing that they're going to taper when the recovery isn't fully here really was kind of the straw that broke the camel's back.
What about the gold? It was supposed to be at least above the $1,800 an ounce. Instead, it's still below that kind of level, despite the fact that it's up about 0.3% throughout today's trading session. So I was wondering, can we set a short-term target over there, and how to explain all the fluctuations to the downside in the recent days?
So you have three different economic regimes that are going on right now. You've got the reflation trade, you've got stagflation, and you've got deflation. Okay, I think the reflation trade is behind us. Gold does well in both stagflation and deflation, but it does much better in stagflation. Deflation, gold just acts as a placeholder. That's why it's treading water here while other asset classes are getting hit. If we do see decreased growth and rising inflation, then you're going to see gold break through that 1800, 1825 and go. But if we're in a deflationary environment, it's going to be more of a grind. It's going to be people selling off risk assets, parking their money in gold, Bitcoin, the dollar, bonds. Those are really the plays, maybe even the yen or the Swiss franc.
Do you think that there is any kind of impact, or there was supposed to be any kind of impact on commodity markets in regards to everything that's going on in Afghanistan?
It definitely added some geopolitical risk. We did see a small flight to gold. We did see equities. They did sell off, the S&P. The Russell, small caps are terrible. You want to be short the Russell on any kind of bounce right now. Oil prices, I think they had a small bit of fluctuation on there as geopolitical tensions would rise. We saw copper prices break on news that China was going to reopen some copper mines in Afghanistan that might take some of the demand off from the U.S. or other copper producers out there. And but I really thought that people were having a problem with their money situation in Afghanistan, getting money out of it. Bitcoin solved that issue if people were able to transfer their money digitally and get it out of their central banks.
Yeah, absolutely. On the other side, you just mentioned the copper, which is extremely interesting. It's once again a peg above the $4, but we know that targets were pretty different, well above the $4. I was wondering what are suggesting the copper's fluctuations?
Copper is often an economic bellwether for the entire global economy, and as copper is broken down below that level, I think it set off some alarms, and that's what caused other people to sell off. Copper, it would have to get above 425 for me to be even saying that, okay, it's gone back to bullish trend and when it might run for the highs, but I just don't see it happening right now. The dispersion of the recovery is kind of all over the place. You've already seen peak GDP, you've seen peak earnings out of companies, and the employment is just very slow, and inventories are very slow. They're nowhere even close to a peak. So a lot of odds and ends as far as this recovery.
Phil, final take. I was wondering, what are your expectations from the Jackson Hole? Do you think that the Fed might be kind of more clear with what they actually want to do? Because it looks like that the FOMC is pretty divided at this point.
Yeah, they are extremely divided. It's been very bipolar as far as like discussions coming from the Fed, and their discussions. And the reason why they're so separated is because economic data, one expectation blows away, the next one is a complete miss. So it has caused that divide in the Fed where half of them are dovish, half of them are hawkish. And I wouldn't be surprised if maybe they try and backtrack and try and stabilize what's going on with this sell-off. The sell-off's not terrible in like tech and S&P, but it's coming. It really is. And I think the Fed needs to be aware of it.
Thank you so much. Phillip Streible, Senior Analyst, Blue Line Futures. Thank you for joining us. Have a great weekend ahead.
You too.